Good morning, everybody. I think we'll kick off in the interest of time. We want everybody in and out in the next an hour maximum. So many thanks for logging on to our webinar this morning. My name is Aidan Shine. I'm with the Southeast Business Innovation Centre, and you're all very welcome for logging on to our webinar this morning on the theme of funding and cash flow management 6 months into the pandemic. So I suppose since the pandemic hit our shores back in March or April, this is our 6th webinar in our series. So far we've covered various topics, including business modeling, funding and cash flow initially back in April, remote and flexible working, exporting and cultural competence, and the payroll function in a pandemic. And if any of you want to go back and relook at those webinars, do sign up for our newsletter, and we can send on the links to you. So now, after 6 months into the COVID pandemic, we feel it's the right time to revisit one of those topics, which is cash flow, funding, sourcing, and managing cash flow. Cash flow is the lifeblood of any business, be it a startup, a growing business, or a well-established business. Cash flow is something that every manager, every CEO monitors on a regular basis. So back in April, it's hard to believe, the time's flown by so fast. We had Derek from Almega and we had Enterprise Ireland on our webinar on funding, and we thought now it's an appropriate time to revisit this topic. It's such an important topic, and we're delighted to welcome back Derek from Almega, and we have Terry Smith from Enterprise Ireland with us as well this morning. So we're going to hear from both of those shortly. So COVID is still with us, and uncertainty still prevails to a great extent. And hopefully some of the insights we get from our panelists this morning will help you in terms of planning and managing cash flow during and beyond this crisis. So the only certainty that we have at the minute, I suppose, is that uncertainty is going to continue for the foreseeable future. So just a quick overview of what we're going to do this morning in terms of, and I promise we'll try and get you out in less than an hour if we can. So we'll have introductions, formal introductions in a moment, but just to notice that we want this to be as interactive as possible. So we would welcome questions from the audience during the webinar this morning. So please do type your questions into the Q&A box as we go along. And we'll pick up those questions during the webinar, and then any left over we'll have in a Q&A session at the end. And also we'll be running some poll questions throughout the webinar, so please do give your answers and insights on those polls as well. So as I said, try to make it as interactive as possible. Just a quick note on who we are in Southeast BIC for those that may not know. We're a not-for-profit organisation that works here in the Southeast with early stage startups and existing companies that want to grow and scale. And we're part of a network of 4 similar BICs located throughout Ireland. And we work very, very closely with Enterprise Ireland. They're our principal funder to carry out this work in the region with innovative and ambitious startups in the region. And we also work very, very closely with our colleagues in the local enterprise offices. I would like to welcome our colleagues from the LEOs, who I noticed are on the webinar here this morning as well. So we work very, very closely with all the stakeholders in the region. Everything we do, I suppose, is to get clients investor ready, be that for public financing or private investment as well. So it's intense one-to-one interaction with clients around business modeling, financial modeling, route to market, customer segmentation, etc. So log on to our website, southeastbic.ie, and you can get lots more information there. And just a final note as well, we do manage the regional H-band, the Halo Business Angel Network here in the Southeast as well. It's an all-island network that's supported and funded by Enterprise Ireland, Intertrade Ireland, and Invest Northern Ireland. So we're always looking for ambitious companies that are looking for angel investors. So more details available on our website there as well. So that was kind of a short intro to who we are in Southeast BIC. So now I'd like to invite Derek and Terry just to give a very short introduction. Derek, if I could start with yourself, maybe that an introduction to yourself and Almega and what you do.
Yep, absolutely. Thanks, Aidan. Almega is a SME consultancy business. We've been in operation for over 9 years. We're based in the Southeast. We work with companies across 3 divisions: debt advisory, outsource HR, and strategic planning, corporate governance. I'm responsible for the delivery of the debt advisory and strategic planning and corporate governance divisions. So at the moment, I suppose we're really trying to help our clients look forward in terms of how they best deal with the pandemic and the crisis in terms of their business, and that they're correctly funded, and that they have maybe more long-term funding in place, and that they have a long-term strategic plan. So we're going to touch on some of those items during the presentation this morning.
Excellent. And Terry, can we have a 60 seconds from yourself on your role within Enterprise Ireland and what you do? Just take yourself off mute there, Terry, for 1 second. You're on mute there, Terry. Yeah.
Thank you very much, Aidan, and thank you to Southeast BIC for inviting me here this morning. So my name is Terry Smith. I'm a manager in the High Potential Startup Division in Enterprise Ireland. So as many of the audience may know, Enterprise Ireland is a state agency that supports Indigenous Irish businesses. Our client types are in manufacturing, internationally traded service, technology business, but very much businesses that are focused on international markets. So I work in the High Potential Startup Division. So we would deal with the early stage companies. Companies would come to us, at that stage where they're raising their seed investment, they're finalising their business plan to raise their seed investment. We invest in startups. Last year we invested in 92 high potential startups in terms of first round investment. We also invest in the pre-seed stage with the Competitive Start Fund, and we also provide kind of soft support services and smaller grants at the early stage and at post-seed stage for startup companies. And I'll be talking through some of those types of supports later on this morning. But generally speaking, we're very busy. We're out there supporting companies. We shout out to any new entrepreneurs that are looking to start up, encourage them to work with Southeast BIC and with local enterprise. In many cases, we onboard companies from local enterprise to the seed stage within HPSU. So overall, we are seeing a lot of activity, great opportunity there. Companies are pivoting, adapting to the crisis, and repositioning themselves. And we're very much open for business to support companies to get through these challenges and get themselves geared up to tackle particularly the cash flow challenges that are out there. And we have the supports available to help companies that are keen to internationalize their business.
Excellent. Thank you, Terry. And it was remiss of me, my colleague Rosemary Ward is on the webinar this morning. Rosemary will be handling the polls and the Q&A and the questions as they arise as well. So welcome aboard, Rosemary, as well. Just before we kick off the formal piece, if I could ask each of you that, the COVID had a huge impact on globally, locally. It's affected many businesses, and that's why cash flow, I suppose, we're focusing on that this morning, because that's probably one of the biggest impacts a business feels when business is impacted by any crisis. They see the cash flow dwindling, or they have to put extra effort into managing cash flow. Derek, if I could start with you, just very briefly, just what have you kind of seen? Like you were on with us there back in April. What has changed, if anything, in the last 5 or 6 months from your end?
Yeah, well, I think, Aidan, most businesses were in survival mode and have done an excellent job in getting to here. I think, our clients would say that the supports that helped them the most over the last 6 months have been the temporary wage subsidy scheme, so the TESS, that has now changed into ESS. But that scheme, coupled with the ability to warehouse their revenue debt, the waiver on rates, and also the ability to take loan repayments from their banks, they're probably the 4 supports time and time again that come up from companies as being able to help them to get to here. So as those supports, I think, change, maybe diminish, particularly over maybe the next 6 to 9 months, that's where I think companies may come under pressure in terms of going forward. But there's no doubt some sectors are actually thriving through this, have reacted well to working online and remotely, and some of the more, as everyone will be aware, the more traditional sectors around hospitality that are really suffering. So there is a kind of a, very much a sectoral approach as well. Different sectors are faring very differently, but the key fundamentals for businesses remain the same. Still, I think most businesses, and I'll touch on this in the presentation, probably still in crisis mode and may need to move out of that now into more long-term planning, and then obviously need to access the supports and move forward.
Okay. Very good, Derek. Thank you. And Terry, like I know Enterprise Ireland were very quick off the mark at the start of the whole crisis in terms of supporting your client base. Has the supports changed in any way, or is it still the same types of supports, or has it evolved as the crisis has evolved?
Yeah, absolutely, Aidan. So, we had to act fast back in March in terms of adapting. We have a very wide range generally of financial supports, and in terms of equity and grant supports, and also a lot of service supports. Those supports are still available, and for high potential startup clients, there were some additional supports brought in. So broadly for the established companies, there's a Sustaining Enterprise Fund, there's new 5K business planning grant, there was some lean continuity grants available, and there are specific supports available for what we call established companies, and specific supports then for high potential startups. So one of the products that we brought in that we've seen has had a greater impact in supporting the companies over the last 6 to 9 months has been the business and financial planning grant. So basically it's a 5K grant that supports the costs of getting a business and financial plan prepared with the support of a specialist financial advisor and business consultant.
Okay.
And it's 100% funded.
Yeah, it's proven very popular, hasn't it? Yeah.
Absolutely.
Yeah.
And we've had literally hundreds of applications, and we're seeing the impact now. The reports have been generated, so it's 100% funded. And we found that has been a really critical support in terms of bringing that financial expertise into companies. And I'd encourage any companies out there that are an Enterprise Ireland client and maybe feel that they need support of an external financial advisor. Even sometimes if you've got your own in-house financial person, it doesn't mean that you need someone else potentially. It's to support them and to bring in that little bit of expertise. So that is a particular support that is available for any Enterprise Ireland client. So even an early stage company, one that hasn't received its seed investment, can avail of that support. And the output will be financial model, financial plan, and 3 years projection. So it should help support the requirement to maybe go to the bank or go to Microfinance Ireland or investors. So that is a critical piece in terms of the support structures. And there are a lot of other new supports coming in every couple of months, couple of weeks.
As things change, I suppose you have to be, as an organisation, have to be adaptable. Yeah, absolutely. And so, Terry, we're looking forward to hearing about some of those supports later. So if I can ask Derek now I'll stop sharing, Derek, and I can ask you to take over there. And Derek is going to talk to us about enabling your business to thrive in a global pandemic. So Derek, if I could invite you to start sharing there. And over to you now, Derek. You're in control.
Brilliant. I suppose this is a follow-on from the webinar we did 6 months ago. And 6 months ago, we really focused on crisis management and reacting to the crisis that came. Today, I just wanted to tweak the theme really and encourage and hopefully give businesses insights to move maybe from crisis mode into more medium, long-term planning while still managing what's in front of them. But definitely encouraging you as a business owner now to maybe move out of crisis and survival mode. So what we're going to touch on really is quick look back over the past 6 months, then give some insights into helping you understand where your business is now. From there, then you can move forward to take a medium, long-term view. Then focus on some cash flow management tips and briefly run through the supports that are available. And unfortunately, at this juncture, I think we need to talk about just options that are available to you if you feel your business isn't going to be financially viable going forward. And then we'll just recap and go through some useful websites. So we look at the whirlwind that has been the last 6 months. I think every business owner back in February was probably looking at the year going forward. I think most of you probably thought 2020 would be a good year. economy was growing. Everything was looking in the right direction. We started to hear about COVID in January, February, and within weeks there was a lockdown, and businesses had to react, had to look after their employees. They were either closed, they were working remotely, and everyone was really reacting to the situation. And it was all about survival and accessing the government supports that were coming online quickly to help you, work and survive through that. And as I said, some of the common supports, in addition to the supports provided by agencies like EI, were the temporary wage subsidy scheme, warehousing or revenue debt. People were activating all of those, and then looking at rebooting and reopening, and we heard terms like the new normal. Some businesses had to change their business model over the last 6 months in response to what's going on. I think I'll give you an example of that. A business that their core business was providing corporate hospitality for sporting events. So you can imagine they quickly came to the conclusion this wasn't going to be sustainable. They have strong contacts in China. Now they have a business importing PPE gear into Europe. So they quickly adapted and moved on. So some businesses had to completely change their model and move forward. And obviously, Zoom is changing the way we all interact with each other and go forward. In some of your businesses, you might have been doing a lot of networking events and face-to-face marketing, and we've all had to adapt and change. So there's been a lot of, at a micro level, a lot of change and a lot of adaptation. If we look at the macro level, and that's very important because so far the government have put very strong support forward for businesses and the economy and people, and we need to look at their ability as to whether that can continue going forward, and it's likely to diminish over the next 12 months. So at the peak, 66,000 companies registered for the temporary wage subsidy scheme, and there was 1.23 million people dependent on the state for income. So that was either the temporary wage subsidy scheme, the long-term unemployment, the normal unemployment benefit, or the pandemic unemployment payment. So the forecasts, and again, it's an ever-evolving situation. The forecasts are changing. There's an estimation that the budget deficit might be up to 30 billion in 2020. But if we look at the volatility, up to this week, the government was forecasting a drop in GDP of 8.5%. But this week they came out and said, well, it looks like it might be less. It might be 2.5%, which is good news. And I suppose with an upcoming budget, it's very good news. There's been 24 billion committed by the government to deal with COVID-19 to date. So the government's ability to continue to support business and schemes like the ESS, the Restart grants, will probably diminish in 2021 and 2022. And as business owners, we all need to be aware of that. Just looking, then moving on from that, I think it's very important to focus on understanding where your business is now. And I'd urge everyone to do 6 months management accounts from March to September, so you understand how your business has got on in the first initial 6 months. And really important in terms of understanding your new cost that has come into your business. And for lots of businesses, new costs will have come in, whether it's PPE gear, signage, changing the way your staff operate, increased staff costs. And by doing this, you'll also get good visibility on your monthly turnover levels. Have they been stable? Are they fluctuating? Obviously, with changes in restriction levels and maybe moving from being open to close or working remotely to working on site, there is going to be fluctuations in your turnover. And it's key for your business that you understand what those fluctuations are. By doing these accounts, it'll help you understand whether your current plan is working, and if not, whether there's a need to change that plan. Again, Q2 and Q3, survival mode, lots of changes, people trying to adapt. So do an outlook for Q4 now for the next 3 months based on what you know for Q2 and Q3. I know talking to a lot of clients that trying to do a set of financial projections for 2021 is quite difficult. And I understand that because there's lots of uncertainty and people are unsure as to how things might pan out. However, you do need a baseline to operate on and to plan your business. So I would encourage you to do a base set of projections based on what you know to date and work from there. If restriction levels change and that means there's changes to your business, you can just factor them in and update your projections as you go forward. But it's very important that you have a base set of projections. And key performance indicators are probably more prevalent and important now. than ever been in helping you determine how your business is doing and what changes you should make going forward. So some of them I've highlighted would be your sales growth percentage, or maybe your sales decline percentage, just to understand how your business is trading. Gross and net margins. If there's extra costs coming into your business due to the pandemic, you'll see it in your KPIs around your gross and net margins, and this might be maybe help you react to those. Your cash flow, your earnings before interest, tax, depreciation. Very important to understand where you're at with that, how that might be fluctuating for you at the moment. And then look at your wages as a percentage of turnover, because if your turnover has dropped and your wage level is the same as has been for back maybe in 2019, this will give you a good sense of changes that you might need to make in your business, and the same with other overheads as a percentage of turnover. I'm just going to talk over the next couple of slides about taking a medium to long-term view of your business. As I said, part of this presentation, I'm just going to encourage you to maybe move, if you still feel that you're in crisis mode or survival mode, try and move your business out of that into a more sustained business model. Even if you look at the Irish government, they've moved to a medium-term plan in the way that they're dealing with the crisis, and it may be time for your business to do the same. So in terms of a medium-term view, we're just going to look at the review of your business model, reviewing your cost base, and also then building in the ability to react to changes in restriction levels within your business. Alan Lakin, who's an author on time management, says, planning is bringing the future into the present so that you can do something about it now. And I think that's very apt to the environment we're all operating in at the moment. So I suppose from a strategic point of view, I'd always say if we're reviewing our business, we should start with a SWOT analysis to give you a good sense of where your business is at. So look at your strengths over the past 6 months. What has worked well for your business? Has remote working worked much better than you ever thought? Is that something you're going to continue with and develop? What is driving your success since March in terms of your turnover, management of your costs, and can you continue to do that? When you're focused on your weaknesses, obviously the main things is what's causing your business problems over the last 6 months, what's having an impact on turnover, and do you have a plan in place to deal with those? There is no doubt that this pandemic will bring lots of opportunities for businesses, and I think as business owners, you may want to be prepared to try and make the most of those opportunities. So if you introduced new channels, or if you sold your product through new distribution channels in the past 6 months, what's working well? Can you expand? If you had no online presence 6 months ago and have built one, even if you reopened your offline presence, are you continuing with your online business, and can you grow it? So what's driving your turnover? Can you build on it? Do you completely need to pivot your business, like the example I gave at the start? So just keep focused on the opportunities. And then in terms of threats, I think we can all see this. Will your sector change the way it operates because of this pandemic? Will the crisis increase the threat of substitution to your sector? So if we look at an example like conferencing, I think everyone recognizes that physical conferences can't happen at the moment. So there's a move to virtual conferences, webinars. So there's a substitution risk. And a lot of the key players in this space are beginning to adapt our model and embrace the online change. So again, if you had a strategic plan in place prior to the pandemic, go back and have a look at it and say, where was I expecting to be over the course of the next 3 to 5 years? Can you accelerate elements to that plan that will help your business grow and make you thrive? Do you need to look at diversifying your product, your markets? That could be your geographical markets, the channels through which you sell your product, and your customer base. So just because we're in uncertain times and people are focusing on managing through the crisis and survival, don't be afraid to go back to your plans and have a medium and long-term view. Where's your business now in terms of your sales online versus offline? Have you opportunities to explore and develop more online sales? A lot of more traditional businesses have done this very successfully over the last 6 months, and there's lots of supports available to help you do that. Here's an interesting one. How do you change your business to target segments that are available to your business? So if you just take the hotel industry as an example, traditionally the hotel industry relied on corporate business, international travel, and conferences, weddings. Some of those sectors aren't available. It's just not happening. People aren't traveling, they're not spending. So they need to look at new sectors that are available, and you will see a lot of hotels advertising student accommodation to students who might need a week a month. So they're moving into those new sectors to change. So apply that kind of thinking to your own business. What sectors are diminishing because of this? What sectors are growing? Segments are growing, and how do you target those segments? You need to collaborate more with people within and outside of your industry to help your business grow. It's definitely going to be opportunity as certain sectors consolidate during this crisis. So how are you positioned in terms of making the most of that? Is there opportunities for you around mergers and acquisitions to grow your business during this? And again, then we're on to the review of your cost base. So we start with fixed costs. Over the next couple of years, do you need the same level of fixed costs that you have in your business at the moment? If you're working remotely, do you need the same size of office? Should you be really looking at reducing your footprint if you think working remotely is going to work better for you going forward? There's also other fixed costs in your business, maybe like insurance costs, fleet costs. If you're not operating at the same level, is there an opportunity for you to reduce these costs? An interesting example of steps a company has taken to reduce its fixed costs is the Australian airline Qantas. They're in the news this week because they had a 30-year partnership with Australian Rugby, and they cancelled that. And the CEO, who got heavily criticised in the Australian media, came out and said, if I'm making 6,000 people redundant, I don't need long-term sponsorship. So he is going through his fixed cost base ruthlessly, line by line, and making unpopular and hard decisions in terms of managing his cost base. And again, on your variable costs, I think one of the key variable costs that could potentially become an issue for businesses over the next 6 to 12 months is wages. A lot of businesses have, and correctly so, maintained staff through the temporary wage subsidy scheme, but this is now reduced back to the ESS scheme, which is a 203 euro a week subsidy paid weekly. So it's greatly diminished. So that may reduce your business's ability to keep your staff on. So you just need to look at, if your turnover's dropped by 50% and your staff costs have stayed the same, you might need to unfortunately make some hard decisions around staff numbers. Just one other point of variable costs: examine your direct debits in your bank account. These are sometimes the hidden costs that just go through monthly that people don't really pay attention to. Just see, do all these costs that you're paying by direct debit, does your business still need them, and is there potential cost savings there for you? Just one other point on kind of a medium-term view, and I think it's very important for every business to build in the ability to react to the changes in restriction levels now. So if Waterford had gone to level 3 lockdown on Friday, was your business ready, or was it going to have a significant impact on your business? So I think if you haven't already, take the time now to enable your business deal with these potential disruptions. I do think it's certain that there is going to be changes in how we operate during this pandemic. So make sure that you have your policy set up. And the HSA website is a really good place to start. Lots of strong policies and procedures to help you be going there. I think you need to plan again to see, can your business trade if there's an outbreak of COVID within your business? So have you set up clusters and bubbles, or would your business close if one of your employees tested positive? So again, bring that into your planning. That's going to impact on your cash flow. It's going to impact on all aspects of your business. So make sure you take a proactive rather than a reactive stance on that. Just to finish on this section, I think this quote is very prevalent, and it's one of the famous Warren Buffett quotes, that somebody is sitting in the shade today because somebody planted a tree a long time ago. So my question, and in this section of the presentation, is what tree are you going to plant for your business today that's going to benefit you over the medium to long term?
Eric, I'm just going to stop you very briefly. We're going to throw up a poll just to preempt one of your next questions, or one of the next sections that you're going to cover, which is around supports to date. So just to get a feel from people what supports they have actually taken advantage of to date. So I'm going to throw up a poll here. Can you see that there, everybody?
Mm-hmm. Yep.
Great. So guys, if you wouldn't mind choosing, you can choose multiples of this answer. So what supports have helped your business most over the last 12 months? Revenue, loans, LEO, local authority, Enterprise Ireland. So you work away on that, guys. I can see you're polling away quickly, and we'll leave that there.
Okay.
And you can work on.
Brilliant. Rosie, will I continue on, or do you want to? Is there any questions you want to ask?
I can minimize that, and you can keep going.
Okay. So we just focused then, I suppose, on the cash flow management element, and I split this across inflows and outflows. And really, I think there's a benefit in analysing the inflows and breaking it down into segments. So understanding in terms of your revenue, much is generated in your online sales, your offline sales, your existing customers, your new customers. Just give you a good sense of where your money is coming from. Also, do you understand what level of supports are coming into your inflows, like the temporary wage scheme, the restart grant? So understanding how that has impacted your cash inflows. Obviously, the restart grant is once-off payment. So again, just be mindful of how these various supports are going to impact on your cash flow going forward. On the 1st of September, there's been a change in the wage subsidy scheme, and there's going to be a slight delay in the payments. Again, have you factored that in? And also, if the ESS expires in March, like it's currently expected to now, may well be extended, but at the moment, it's been signaled that it's ending in March. How is that going to impact on your cash flow going forward? Again, I just want to highlight to businesses, make sure you're collecting your debtors on time. Make sure you don't lose focus on your receivables and getting your cash in. This is vital for your business going forward. Just looking at just moving on to the next slide. This is just a simple exercise to help you understand your inflows and how they might fluctuate and what's important for your business. So if you, again, just following on from the previous slide, if you break down your inflows into existing customers, new customers, online, and then maybe what's not normal business receipts, to give you a good sense. So if you just look at this example from June to September, as a business, you might think you're doing quite well in June. You have 16,000 coming into your cash flow, but over 6,000 of that was from various government supports, which weren't available to your business in September. So you can see a big decline there. Also, if you look carefully, this business has been successful with online sales, but it would appear to have an issue with its existing customers. So this business is going to have to take action to see, can it get its sales to existing customers back up. So that kind of analysis will really help you in terms of your business planning going forward. Then if we move on to outflows, one of the key aspects for your business is to understand what legacy debt your business owes as a result of COVID-19. So if you think back to March, this could come in the way of trade creditors who you didn't pay if your business shut down for 6 or 8 weeks. And you may not have paid back those amounts. You may be paying your current trade creditors, but there might be a build up on your trade creditors. You may have warehoused your revenue debt and there's a build up of that money owed. The same, everyone has probably availed of the rates waiver, but they will come on stream again. And you may have got a temporary overdraft that's now beginning to roll off again. So you really need to look at when you're going to start repaying your legacy creditors in 2021. Have you put a payment plan in place? Have you agreed your payment plan with the revenue? The deadline for the warehousing, the first phase of that was yesterday. So have you interacted with them, and do you know what you have to do in terms of your revenue payments? You will probably have to keep your current revenue, VAT and P30 returns current in 2021. So how does that impact on your cash flow? Some businesses will avail of the loan repayment holidays, which are now beginning to come to an end. And the scope to get a blanket full capital moratorium going forward is diminished. Banks are going to deal with each company on a case-by-case basis. And there is a sense that people will start repaying against something. So again, you have to factor that in. And again, I'd advise people to start dealing with this early. You'll see there nearly 24% of all SME lending across pillar banks receives payment breaks. So there's going to be a huge volume of case-by-case requests going into the banks. So you need to deal with this early, or as I've seen with some clients, you could see that the repayments, your full repayments start again because you haven't engaged and you haven't been proactive on that. So would urge you to look at that. So if we just analyze your cash flow, I think a useful exercise is to look at your 2020 cash flow versus your 2021 cash flow and understand what differences might come as a result of the COVID-19 pandemic. So if we just look at this business and the wage cost, this is the wage outflows that's to the business. So this excludes any benefit the business might have got from the TSS or the ESS. So for this business in 2020, its wage outflows were €50,000 because it benefited from some of the supports. That level of support won't be available to this business next year, so its wage outflows is going to increase by €25,000. It's also going to have to make its current revenue repayments and start paying back under some agreements on the warehouse debt. So it's an increased outflow to revenue of €20,000. Its bank repayments have started. It availed of a moratorium for the 6 months this year. It has started its repayments, but at a reduced level. That's an extra 20,000 of an outflow. And again, rates and creditors. So when I analyze this business, next year it's going to have 80,000 of additional cash outflow. That business needs to know, can it adapt to it? How will it manage that? And how can it move forward? So just a brief overview now of the supports that are available. And I think the first thing I say is there's a significant amount of supports available to businesses. So take the time to understand.
Derek, we can kind of fly through these, I suppose, because we'll be sending out the slides afterwards, yeah?
Perfect. So look, in terms, you have support from revenue, which we've touched on. There's loan supports through the SBCI and Microfinance Ireland. Just to say on the SBCI supports, they're all done through the pillar banks. So again, you just need a little bit of time to put them in place. Interestingly enough, the take-up initially has been low because I think a lot of businesses have very little appetite to borrow at the moment. There is the supports through the local authority, and there's been very strong take-up from the restart grants, which is a strong positive. Terry is going to go through some of the supports from Enterprise Ireland, and Enterprise Ireland have a comprehensive suite of supports available to business. And obviously, the local enterprise offices also have very comprehensive supports. The business continuity voucher was again a very strong take-up and supported a lot of businesses to put plans in place going forward. So there's just a summary of the supports very briefly, and familiarize your business with those, and don't be afraid to apply and get what is available to you. Just one slide then. I think this is going to become quite prevalent over the next six to 9 months, is if your company, if your business isn't viable, you are going to have to take action. So there's a number of options around this, that I'm just going to very briefly touch on. You can potentially agree a scheme of arrangement with your creditors. This is just a voluntary negotiation with your creditors to pay less than is owed, get them to accept less, and this may help your company survive. If not, and if your company isn't viable, you may have to look at a liquidation, which effectively brings the life of the company to an end. Examinership is one that we're beginning to see in the media becoming more and more popular. This is whereby a company can, under the protection of the courts, restructure its debts with its creditors and then trade on after the examinership. Because it's typically done through the High Court, there is a commercial court version, but it is done through the High Court. The costs involved in this can sometimes limit companies' abilities to access this one. And receivership is typically where a secured creditor, like a bank, would appoint a receiver to sell the assets over which it has a mortgage to get its debt back. And usually companies don't trade post. It's quite rare for them to trade post the receivership. So in terms of just looking if your business isn't viable, this is quite difficult for business owners. It'll be emotional and it's very hard to be objective, but I would encourage you to make the hard decisions quickly, get advice. If your outflows are more than your inflows, and that is not going to change, you really do need to act, and act now. If you're a company director, you do have key considerations around reckless trading and making sure you're acting in the best interests of creditors and not members or shareholders, and that you don't do things like repay a director's loan to yourself ahead of other creditors. So just understand your obligations as a company director if your business is in financial difficulty. Just to really recap then, I think, just very important that you understand where your business is now. If you can look past the pandemic from survival and crisis mode into medium long-term mode, that is definitely going to benefit your business. Cash is king, absolutely. This hasn't changed. This has been the mantra of business for many, many years, and it's probably more prevalent now. There is significant help available. Make sure you're aware of it and ask and do it well in time, and try and make the hard decisions quickly if possible. Again, some very useful websites out there. The Department of Business, Enterprise and Innovation is a really good starting base. Lots of good information on Enterprise Ireland local area office websites as well. So that is that from me, and I'm happy to take any questions. Thank you.
Brilliant, Derek. Thank you so much. As always, very insightful and a practical approach to the topic there. We have some questions there, but I think we'll keep them to the end, I think, now. Before our next section, Rosemary, do we have another poll question to go?
Yeah, we'll just throw up another poll, folks.
Cool.
Again, it's related to some of the stuff that Derek was talking about. So I wanted to find out, have you changed your business model since March 2020? So you can see the question here, have you changed your business model since March 2020? And the answer is yes, in a significant way, yes, marginally, no, or no, but intend to now. So we may not get time to share the results of these afterwards, but I will send them out in the email to you all afterwards, and we'll be sharing them on social media, etc. So work away there. I'm going to minimize it and let Terry get going on her.
Excellent. Thanks, Rosemary. So Terry, if I can ask you now to share your slides, and you can spend the next 10 minutes or so outlining the supports available from Enterprise Ireland. Thanks, Terry.
Sorry. Is it showing the presentation?
It certainly is. Yep.
Great. Okay.
Just go into presentation mode maybe, and
yeah,
that's it. Perfect. Looks good.
Okay, so I'm conscious that there will be a mixed audience. So there may be, early stage companies, entrepreneurs. There could be established companies and companies maybe that maybe are not Enterprise Ireland clients or local enterprise clients. So I'll focus a lot of the discussion around supports for high potential startups and explain what a high potential startup is. But I will touch on elements of kind of the broader supports from Enterprise Ireland, or if you need to find out where you can get support, how to. Depending on the type of company that you are, how you can access that information as well. Okay, so Enterprise Ireland is a government agency supporting Indigenous companies. So we support the development of export-focused manufacturing and internationally traded service companies. So there is on our website a description of what an internationally traded service company is. So just to give you an idea, manufacturing typically, food, engineering, electronics. On the international traded services side, a lot of our digital technologies companies would sit in this space, companies with SaaS type models, and companies that are basically selling software as a service. We also have companies that are in maybe educational services. Other areas are examples such as companies that are in financial international trade services and the financial services side, fintech, etc. Life science companies that are developing products. So companies that are undertaking R&D would have view to being a manufacturing company, or would have view to being an international trade services company, are the type of companies that we would deal with in the high potential startup division. So we deal with companies up to 5 years from their incorporation date. So usually when we talk about an established company, we're talking about a company that's beyond 5 years from incorporation that meets our eligibility criteria. So as I said earlier, we support startups, high potential startups that are export focused, and also SMEs that are more established, or what we call over 5 years old, across those eligible sectors as well. And we do quite a number of large companies, so companies that are over 250 employees. And I think our objective on the high potential startup team is to try and get as many companies accelerating their growth to be the SMEs and large companies of the future. Enterprise Ireland also supports college-based researchers. So we have an arm of Enterprise Ireland that funds third level research. And what we see a lot on the high potential startup side is that research funded that progresses to development of novel and innovative technologies that are onward spun out into new companies. So we would have quite a number of new high potential startups that are what we call spin outs, and they tend to be companies that have great novelty, great innovation, and we see some great success in the growth of those particular types of category of companies. Okay, so I think it's worth highlighting as well, there are extensive range of supports from Enterprise Ireland. So there are service supports or financial supports, and really what we're trying to do is, and what the advisors do when they're working with a company, is to determine okay, across all the critical business areas, and we're talking a lot today about finances, but actually all the other areas of the business all interweave or all connected. So, you know, we would look at business needs in the areas of strategy, sales and marketing, people and skills, finance, whole area of operations and innovation, and determine, okay, what's the gap, what's holding the company back in terms of getting to the next stage and growing, and, you know, what do we have in our toolbox of supports, be it a service or be it a financial support, be it a grant or an equity type structure that fills that gap. And the whole objective is to try and ensure that we're identifying, working with the company to identify what are the challenges, you know, the real challenges as opposed to the perceived challenges, and then how do we use our support structures to address those needs. So just to give you some examples then on the services side, because I think often there's a lot of discussion around, you know, financial supports, grants, what grant can I get, what financial supports can I get? But just to highlight that a lot of the service supports from Enterprise Ireland are as impactful, and in some cases, you know, even more impactful than some of the financial supports. Although I do appreciate financial supports are really critical at the moment, but just to bear that in mind, that the services are there. So for example, we have a business growth advisory service, we have a mentoring service that's available for high potential startups and also for more established companies. Next week, we're running our International Markets Week. We're actually doing it virtually. It used to be done in person in every other year in the RDS. We have to do it virtually now next week. And for high potential startups, we've in the region of 600 companies already signed up in our client base in the high potential startup unit for that. So there will literally be thousands of meetings next week with market advisors from all over the world. So that's a really critical piece of support. And then through the year, the MAs provide support on market intelligence, introductions to potential buyers for our client companies. On the people and skills side, you know, with COVID, there has been kind of an adaptation to newer skills types. A lot of, you know, experience in selling online, that kind of thing. We have run a certain number of webinars on that. In the high potential startup space, we run the Sprint program. It's run in collaboration with Dublin Business Innovation Centre, and it's over 3 days. Early stage companies are given modules and training on sales and marketing, on finance, on strategy, product market fit. And it's free of charge. So just to highlight, a lot of these supports and services aren't going to cost the company anything. On the financial side, we can support companies by introduce them to the business innovation centres who manage the Halo Business Angel networks. We also have extensive connections into banks, intermediaries, VCs, different investment houses. So, you know, don't be afraid to ask your DA if you need connections into other funding providers while you're working with EI and we're supporting you. You know, we do have extensive connections, and there's arms of EI that have those connections, and your advisor can help facilitate that. On the operational side of the business, we have a lot of lean supports. We have a panel of consultants and specialists that can be accessed through the lean grants. Generally, they're more available for the high potential startups that are beyond the seed stage and established companies. And on the whole area of innovation, we have extensive links in third level. We've also got the website on Knowledge Transfer Ireland. So there's a lot of technical know-how in our third level base around Ireland that Enterprise Ireland can support you to get access to. Particularly important at the moment with companies that maybe need to be more innovative, pivot, and look to get external technical expertise. So as I said earlier, in the context of COVID, and now we've Brexit to contend with back on the table, that it's important to highlight that, you know, Enterprise Ireland had to bring in a lot of new supports to to adapt and to make our products relevant for clients. So you'll be aware of the Sustaining Enterprise Fund. We've our business and financial planning grants, 5K grant, which I mentioned earlier, to 100% funded to support the cost of development of a robust financial and business plan to help the company navigate through the current challenging times. We've small and large Sustaining Enterprise Fund, and just to highlight, they are mainly for companies that are more kind of established, or companies that are had at least 10 people, full-time equivalents, as at the end of February. So for the Sustaining Enterprise Fund, you've been hearing a lot about it. There are particular criteria for those supports, and it's all available on our website. But just to highlight, it's not the only support. So, you know, with our other announcements, we get a lot of publicity around our online retail schemes, the COVID product schemes recently launched, We've our lean business continuity products. So these are all products that were recently launched in the last 6 months. But I'd just like to highlight they do have specific criteria. That they're not, they're relevant for certain company types, and that's the piece where the Development Advisor in Enterprise Ireland works with you to navigate the supports that are there. And I'd also like to highlight there's a lot of our existing supports and nearly all of our pre-COVID supports, they're all still there. So the examples are the e-marketing grant, our key person grant, supporting for the cost of a new graduate, mentor supports, expansion supports for more established companies. For the HPSUs, our feasibility grant support, innovation partnership, and our HPSU equity investment is the one that I think a lot of companies would associate with high potential startups in terms of our co-fund and investing. And just to say that, we work very closely with companies to see, what can be a potential solution. So I think it's just important to highlight that. It's about engaging with your advisor and working with them to navigate the support structures to get you the appropriate solution. Okay, so specifically on the high potential startup side, so companies that we have that are up to that 5-year, from 0 to 5-year incorporation timeframe, our main supports are around the seed equity investment, and we also do follow-on investments as well. And we've been supporting companies that we've maybe invested in the last few years for an initial round to help them, get through these cash flow challenges, and maybe doing further follow-on investments. The 5K grant is available, the Business and Financial Planning grant is available for all Enterprise Ireland clients. So even if you're an early stage company that's recently been onboarded to Enterprise Ireland, and you might, a lot of the early stage companies don't have financial and business plans, don't have the financial skills. So be sure to talk to your advisor about that support if you haven't done so already. We have a feasibility grant, innovation vouchers, the Competitive Start Fund closed recently, and we now are assessing those. And just to say, we've seen a huge uptake in interest in that, which is good to show that there's still a lot of interest out there on the in starting up new companies. We've got our Sustaining Enterprise Fund, as I mentioned earlier on, and then there's that is relevant for some high potential startup companies, but again, it's having the minimum of 10 jobs, and we have those follow-on HPSU investments as well if the companies meet their criteria. We have the Horizon 2020 support and also the disruptive technology funds, which are again relevant for particular types of companies, but just worth being aware of them. And as I said, a lot of the pre-COVID timeframe, all those supports are still there. Okay, on the service side then, we support companies with planning HPSU applications and mentoring, and the team at South East BIC, Aidan and Rosemary, and the teams in the BICs around the country also support companies at the early stage, and with navigating the requirements for our high potential startup investment applications and for the Competitive Start Fund as well. We run the Sprint program, which I mentioned earlier, which is a skills program. We do investor pitch training. Again, these are free of charge, these supports. Access to our international offices, and I mentioned International Markets Week next week. And we have a lot of sector and market intelligence information, which is readily available to all companies as well. We also have extensive range of mentors, experienced business people that are there. Again, no cost to the company. It's a small grant, but it's actually no cost to the company. And I think that, there's a network of expertise that companies can avail of as well. I've mentioned the connections then to third level, and also the connections into the investment community. So I mentioned the 5K Business and Financial Planning grant already. We've had hundreds of applications there, great interest from companies, and great impact there for companies as well. And just to highlight again, that if you know who your development advisor is in Enterprise Ireland, great. If you think get in touch with them. If you think you've lost touch with your development advisor for whatever reason, you don't know who they are, contact businessresponse@enterprise-ireland.com. If you're a company you're not sure, you think you might be eligible to be an Enterprise Ireland client, but you haven't dealt with us, for example, your business model might have changes and you might now be eligible, please contact businessresponse@enterprise-ireland.com. And if you're an early stage company and not an existing EI client, and you're seeking maybe a potential referral to local enterprise or Enterprise Ireland, you're maybe not quite sure which agency you should be going to, at the stage that you're at, please contact Southeast BIC, Aidan and Rosemary. You know, we deal with them on a weekly basis. They often refer companies into us, and you know, and we can have that initial discussion. If we think you're premature for a high potential startup, but your prospects for the future, we will have, you know, have a chat with you. We can refer you to local enterprise with a view to onboarding you in the future when the timing is right. So I'd send that message out there to companies as well. Be sure to link in with local enterprise as well and optimize the support structure there. And we work very closely together and regularly with onboard companies directly from, as they progress from local enterprise. So thank you very much for the time, Aidan. I'm very welcome to take questions afterwards. Thank you.
Yeah, brilliant, Terry. Thank you very much. A very good overview of the supports available, the many supports available from Enterprise Ireland.
Okay.
Rosemary, I think we have, before the Q&A, we have one more poll.
Yeah, we've one more poll. I'm going to launch it now. So it's, do you expect your business to grow or decline over the next 12 months? So grow marginally, grow significantly, decline marginally, decline significantly, or stay the same. So you might give us your feedback on that. We're definitely running out of time, and I know we want to do some questions, so we're not going to get these poll results to you, but I will be sending them out to you, anybody who's registered, so you'll all get this little bit of info later on.
Yeah, and we put out on social media and stuff as well. So
exactly.
Yeah,
I'll let you poll away there, and Aidan, you can move on.
Excellent. The Q&A, Rosemary, do we have some questions coming in there? Do we?
Yeah, we have a couple of questions that might be useful. The one question here is Nolene is asking approximately what percent, I think this is for you, Derek, approximately what percentage of wages should be in relation to sales?
Yeah, look, I suppose it's a good question, but it's specific. So I'd say Nolene probably knows in her own sector, like if I was to give an example, you know, in hospitality, it's probably about 40%. Ones, you know, if you're a staff, it could be 15%, 20%. So it's really industry specific, but it is a good KPI to have and something you should look at. I would say to Nolene, have a look back at your accounts over the last couple of years and see what it was and see what it is now and see has it moved.
Yeah, and it can be industry specific and business specific, really, Derek, can't it?
Absolutely. Yeah.
This is one here for you, Terry. This is a startup. So the startup of 5 years old are only eligible for HPSU, and does that mean the support from EI is only CSF till 5th year anniversary of a startup? Okay, I think, yeah, we need to clarify.
Misunderstanding a little bit there. Yeah.
Okay, so so what we define a high potential startup, it's a company up to 5 years from incorporation, but obviously would need to meet our other eligibility criteria. We, you know, would have to be undertaking eligible activity, and we would also expect that the company would have the potential to get to 1 million in sales, ideally export focus, and 10 full-time equivalents within 3 years of start. You know, they're the kind of the broad parameters. So for Competitive Start Fund is just one product type. Now, it's very well known out there, and it's usually the kind of key product that's known at the pre-seed stage or the pre-HPSU stage. And the requirements there are that the company must be under 3 years from incorporation. And the reason for that is that generally, you know, if you can get the CSF or that type of support at that stage, and it's usually the appropriate stage, you still have a couple of years within which to get a HPSU type of investment. Now, if you're over 5 years from incorporation and you're undertaking an eligible activity and you've got your business plan and your export potential and all of that, you know, we have a lot of clients that are over 5 years from incorporation that are dealt with by a different division. So, you know, I hope that clears up that question.
Yeah, no, that's perfect.
Yeah,
Terry, thank you. This is a slightly long one, and I think it's for you, Derek. Regarding collecting debt on time, it appears that if we do not chase outstanding invoice payments for the final quarter of the year or issue any invoices for completed work for the remainder of the year, this will immediately reduce our tax burden for 2020, which is by far our biggest business cost, and would counteract the uncertainties of continuing business in the new year with potential recession, etc. Would this be a feasible or recommended option in respect of cash flow? Our inflows are more than our...
breaking the accountancy accrual principle in accounts, isn't it? A little bit.
Breaking a few principles, but things on that, I just say broadly, you know, your inflows, obviously cash in is usually important, and I know a lot of businesses who've gotten through the last 6 months had reasonably strong reserves going in, so it helped them get through that. So I'd always say to business, try and maximize your cash reserves. There is a difference between your cash flow and your revenue for your accounts. When you issue, you don't collect it until next year, it's still going to go into your P&L as revenue. So again, I'm not sure. The other point is if your tax cost is your biggest cost, very well then, so obviously 12.5%.
Yeah.
Look, it's each individual business owner needs to make these decisions. My only concern for that business is if you're not issuing an invoice for 3 or 4 months, will your customer pay you when you eventually do invoice them in Q1, Q2? And who knows, if they're in financial difficulty, it might be harder to get paid then than now. So there's a lot to weigh up in that question, Rosemary.
Okay, I think that person needs to get some advice very specifically on that issue. So Derek is available for that kind of advice at very reasonable terms.
Absolutely.
And another question, I suppose, is questioning whether is cash flow the biggest banana skin for companies, really? Is cash flow the biggest problem during this pandemic?
Well, I think that's very straightforward. Yes, it is. I mean, if your business runs out of cash, so you don't have enough money to pay your bills as they fall due, if you're incorporated, you will have difficulty potentially trading going forward. So I would say yes, and I would say that a lot of business owners are focusing a lot of their attention on the cash flow. We even saw it in the last week, businesses announcing layoffs because of the change in the wage subsidy scheme, saying they can't keep their employees on anymore because they just doesn't make sense with the change. It's too expensive. So yeah, there's a lot of cash flow management going on at the moment because it's key to the survival of businesses.
Okay. One more question here. Sorry. We're a startup from Russia, no legal entity yet, just a team going to relocate to Ireland. What is a typical way to relocate business to be eligible for Enterprise Ireland support? So I know there's support people within Enterprise Ireland who work on this, Terry.
Yeah, I think the important point is that there's evidence of plans to incorporate a company, and we regularly deal with teams, even people that are already based in Ireland. So I think the best thing to do is to my email address, I think, is on the slides there. So it's terry.smith, terri.smith@enterprise-ireland.com. Send me an email, or you can route it through Southeast BIC, and we'll follow up with you. But the main thing is that we're clear that you plan to, if you're incorporating here, that you will be based here and actually moving here. I think it's important that the promoter and the team are based in Ireland. It's a requirement that you're actually based here and not just incorporating here, and you'll be creating the jobs potentially here as well. So I think if you want to drop that message, we can link in with you then.
Yeah.
Thank you.
Okay, so you guys have Terry's details there, and if not, you can contact us via the email address that you would have got your registration link on. Okay, that's pretty much it. There's a few other vague ones that we'll try and answer kind of directly.
Okay, thanks very much, Rosemary. And just before we finish up and do the thank yous, just a note that our next webinar is on at the end of October, the 22nd of October. We're changing tack slightly away from COVID, and in association with FR Kelly and Enterprise Ireland, we're going to have a webinar on intellectual property, patents, trademarking, and copywriting. So we'll be linking up with anybody who's registered and on previous webinars to sign up for that. Should be a very interesting one. So listen, just to finish up, I suppose, first of all, I'd like a sincere thank you to both Derek and Terry. We really, really appreciate giving your time this morning. As usual, very, very insightful, practical and instructive, the information that you've given participants this morning. So thank you so much for coming on this morning. We really, really appreciate that. Thanks to the team here in the BIC. Thanks to Rosemary for handling the Q&A and the polls and the background. To Denise, Carol, Michelle, and Siobhan, who's on maternity leave, but here in spirit with us this morning. I think she's actually logged on this morning, so welcome Siobhan as well. And last but not least, thanks to all the participants for logging on this morning. We do appreciate you taking the time out as well, and we hope you've found it very useful and practical. So until we see you again, stay safe, everybody, and talk to you soon. Thank you very much.
Bye-bye.
Thank you.
Bye-bye. Bye-bye.